Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, October the 9th, the year 2018. Let's talk trading habits. Once again, in my inbox, there was a blog post about habits. It wasn't about trading, but it was about habits. And they said one of the things about, if you have a bad habit, what you have to do is make it impossible for you to do that bad habit. So, for example, if you're a smoker, don't have any cigarettes or matches in the house, and you can't smoke, right? No cigars, no rolling papers, no tobacco, nothing. You make your environment so it's impossible for you to smoke. On the other hand, they said you also need to automate the good habits. So, for example, if you want to save, I don't know, a certain amount of money per month, make that savings automatic. Have your checking account, your paycheck goes to your checking account, and then that automatically the day after, a certain amount of money is put into your savings account, which you don't touch. So, how do we apply that to trading? Well, let's think. You know, Trading, we're basically in either the entry state, which only takes about a second or two. We're in the exit state, which only takes about a second or two. Or we're in the wait state, which could take many seconds, if not, minutes, hours, days, weeks, months, years. So, if we look at it that way in each state, so maybe you have a problem with the entries. So of course you could, in the MT4 platform, you could write an EA that does your entries and then you do the exits manually. Or maybe you have a problem, you know, putting on your stop loss. So maybe when you enter a trade, you have a EA that looks for trades and automatically sticks in your stop loss, based on your position size, and your money and risk management rules. This thing we talk about here all the time. Or maybe you have a problem, taking profit. So as soon as you put on the trade, you have an EA that says, hey, if it gets to this point, I'm going to exit the trade. Um, or maybe you have a hard time um, trading your plan and you just start to do what we call the airball trades. You just, I think that's going to do this, and you just jump in the trade. Well, maybe you have your screen set up so you have to go to another screen or go through a couple of steps to actually get to the point where you can actually put that trade on. So there's many things you could do to automate the good habits and make it impossible for you to go forward with the bad habits. You can do things like what I do. Where is it here? It's just like, hey, do not short. You see that skull up there? It's like, no, you don't want to go short right now. That's what this is telling you. So you automate this so it talks to you. So let's just move on here. As we can see, we're now 64 pips off the bottom of the monthly. I think when we looked at this yesterday, this was like what, 1 or 2 or something. So you can see price has gone up, but we're still within the candle body. We're out of that upper wick zone, the previous month's candle there. And here on the weekly, we're still out of the lower wick zone, but 62 pips off of that low. Okay. Once again, for those tuning in late, we filled all the gaps yesterday. So you snooze, you lose on those gap trades, right? On the daily, you see we broke through the daily previous day's low out of that lower wick zone, and that was worth about 17 pips if you took it. You can see here on the range, we only got 2 over 100, the old beast and the new beast, right? We got 89 pips on the euro, but only 46 on the dollar yen, once again proving why we can make more money based on range with the euro yen. And as we move over to the buy zone setup, once again, here we go. The people want to say it's hindsight, but I mean, these lines haven't changed all day. So right here was your short opportunity. This short was never threatened with a stop right here. This long spiked up. It was a long candle, about 20 pips. If you jumped in after it already moved 20 some pips, that's on you. So that would have either been a scratch or a loss. Yeah, so you don't really want to jump in on a long candle like that, especially if it's not on a news break. Here we had a short opportunity here. And once again, you can see right there was the short. So when it came back and exited this wick zone area here, take the profit. Once again, another short here. Actually, that wasn't a short because that was outside of the zone. But you had a chance to short here. Very nice profit. You probably punched out about right there, which is okay. And that was it. I mean, simple trades. But one thing I should probably tell you about this particular setup here, and just to show you here, I'm basically using the TROHL5 indicator along with the buy zone, and the other stuff you really don't need if you don't want to have it. What we're looking for is price. See, the VWAP, the volume weighted average price, and the future pivot point right here. See, probably by the end of the day, price is going to try and do here. Come and try to hit this point. Okay, usually VWAP is a squiggly, but you know how I feel about squiggly, so I only want to know what the current VWAP is because I want to see, maybe I want to trade toward that VWAP. You can see here VWAP and future pivot point are all lining up. Okay, so you might want to trade towards these. Then, but we have the pivot right here. Didn't quite reach it, so we've got to miss pivot. Rat zone traders, you guys know what to do. Had a little green rat trade there, and another one. See, you had the rat reversal or the turn trades here at the bottom, and you see what happened. Right here, you're getting a turn trade at the top outside that zone. So right here, you can see here, failed to make a new high, came in that wick zone, out of this wick zone, still in the rat zone, so you could be short right now and up about 10 pips. Once again, we haven't hit that pivot, so you can see here we've added another missed pivot to the chart, and we'll just have to wait and see which one of these pivots gets taken out next. And back to our price action chart. One ball at the bottom, green at the line, two ball at the top, red at the line here with the double O or triple O, depending on if you like to look at the points or you only look at the pips. I really hated it when they went to points. But anyway, three ball at the bottom, right there, green at the line. And that was a nice run up here. And you see here we're still, three ball at the bottom, so we can still go green at the line. Another nice run up there in this hour. The usual 5 lines from the previous day. Some of you can recognize that that's a wick zone, and here's a wick zone, right? And you can see here, we're just taking price at the line. And here's the wick zones right there. Same 5 lines, but we've just got the wick zone colored in. So you're just like, well, why do I have 2 different charts if it's the same thing? Well, remember, on this chart, we're taking the crosses at the line. This chart, we're just trading out of the wick zone. So yeah, it's the same lines, but it's a different strategy. So see here, we would only go long, and here we would only go short. But if you're just trading the candle colors, see here, you go long. and there you go short. So it just depends on what strategy you want to employ. But I just wanted to make that distinction so those of you who've been watching, it's like, well, it's the same lines. Well, why is it two different things? That's why. Once again, the holo setup. You see we had a highest open put in right at the beginning. It touched in, dropped down, made a new high, but gave you another chance to go short here. And then you had one opportunity here. Boom, it just took off. Another short opportunity. And there you go again, right? Lots of opportunities. But these simple trades. And yes, some of these you could automate if you wanted to. But just remember, when you automate, there's so many things that can go wrong. I've been over that, and that's why I don't automate. Okay, short triggers here didn't get payoff much. You can see the long triggers have put in, but we haven't hit any. Previous daily, weekly, monthly, open, high, and low. I really like this chart, especially when you can trade at the line. And you can see here we had just a couple at the daily low. Pip chart, tick chart right here. You see ask drop below, bid got above, ask drop below again, and now we're just kind of wavering here. But once again, these scalps were probably good for 4 to 5 pips. Not bad on a short time frame. Einstein line. There's an opportunity here, probably a scratch, a nice short, and it's continuing. You see we got some selling just kicked in. So the neat thing about this is where you can, like I said, I need to work on the code, put this over here. You can see if it's moving. We can see where the short started. We can see how many pips it's moved. So if you look at the movement of pips versus ticks, you can see, it just switched right to buying right there. And you can see, is the buying, is it just somebody's just filling an order here? Is there much movement, or is there any movement? See, selling kicked right back in. So sometimes you don't necessarily use this to exit as soon as it flips. You might want to see, well, how much has it moved? Is it moving, or is it just sitting there? Because if it's sitting there, then chances are it's going to not do much. But if it's as it's selling, if it's moving down, you can see something's happening. So right here, we've got this selling going on, but it's only moved 2 pips, which is basically what the spread plus or minus a couple of points in the spread here. So, but now we're pushing. See, we just had a nice little jump. So, and you can see now it's really pushing. See, what I'm thinking about doing is actually it's like on each one of these lines, let it tell you how many pips it moves. So you would know just how far. See, nice selling kicked in there. Okay, fellow traders, that's it. Remember, habits. You want to eliminate the bad habits, automate the good ones. Make sure your environment is such you can't do the bad habit. Because remember, and always remember, never forget, it's not what you trade, it's how you trade it. So let the draining of the banks continue.